Hello everyone, good day. How are you doing guys today? How is everybody doing today? Let's make sure you can see my screen and also hear me well. Yep, so everything is fine. Let's see who is with us today. And of course, where are you watching us from? We are ready to start with another live and check how the market actually behaved the last couple of days. Arabic Forex, how are you doing, my friend? You well? So I figured out something last week and I would like to share that with you. Let's start with the gold. What I want to show you here, it's something that you can use if you are a beginner trader and you feel overwhelmed with, let's put the 20 here, with understanding how you're going to figure out the direction and where it's the best price level to buy, to sell, and so on and so forth. Okay, I want you to do this thing. Go on your platform where it says indicators, check the moving averages, exponential moving averages, not the simple moving average. And just throw the 20 and the 50, the same way I do it. So, and I want you to isolate the moving averages. This is the key. I want you to isolate the moving averages only on the minute charts. That means between 1 and 59 minutes in both of them. It's very important to do that. Don't have moving averages on your charts like everyone else. Do it differently and you will see how much better your trading will improve. I know a lot of traders trying to move from smart money concept to ICT concept to ABC to fair value gaps to anything else that floats on internet. As a professional in the market, I figure out that simplicity pays off. So you can have a winning ratio of 2-to-1 using one trading strategy that is complicated. You can do the same using a simple strategy that also pays consistently, right? So, and in order to avoid confusions, I don't want you to see moving averages in all time frames. I want you to follow a specific process every time, every single day. Start from the daily chart, like I'm doing here. Go on the daily and put the previous day's low. It's going to be a key support and the previous day's high. You are trading for the sake of making profits considering all the losses occurred, but during a specific period of time throughout the day. Is that correct? So to do that, you don't need to become an analyst. The best thing is that because I'm a professional analyst as well, I have certification as a professional analyst and I provide market analysis, but I'm also a trader. And there is a big difference between these two. A trader, it's 20% analyst, maybe 30%. But that's all. Many people, they trying to do too much analysis. And I don't want you to be that kind of people. I want you to use a simple process that you can rely on and execute every single time. On the daily chart, as a trader, you don't care what happened 5 months ago, 10 months ago. You don't care about this stuff. You only care what happened yesterday, what happened a couple of days ago, and that's all. Hey Oliver, nice to see you around. So, why I do previous days low and previous days high? Because these are the most significant areas. Then, if you want to go down to the 4-hour chart, very good, go down to the 4-hour chart just to check if there is any other significant support or resistance level stands out on your chart. If not, move on. Like now, I'm moving on. Going to the hourly time frame, I want to figure out which direction I'm going to trade. I see that the price now sitting at support. Right here, it's a key resistance. But there are also many other resistance levels all the way here. Do you see that? All the way here we have resistance. So what do? We can mark these soft levels here. You can mark all these levels. It's going to be easier to just throw a rectangle right there. And if and when the price, let's say I'm here for 1 hour. If the price doesn't move up to there in that hour I'm looking to trade, then there is no point to focus on these levels up here. Do you see that? You don't need to focus on what is going on up there. The time you are interested to trade this bottom part and maybe a drop below or just the bounce above, and you're going to be here for 1 hour, let's say. Maybe the price will only go up to the middle of this bearish candlestick. Okay, simple as that. So, as for now, gold is hovering around the previous day's low. And that's all what we need to know from here. If I go down on the 5-minute chart or 15-minute time frame, from here I want to pick up trades. And here is the moment you need the moving averages just to help you timing your entries better. When we're going to trade the S&P in a while, I will show you that I use the volume weighted average. Here on the currencies, on the CFDs, on gold, I'm using the exponential moving averages. Same, no, not same, but similar, let's say similar methodology. Okay. Is that clear? Guys, by the way, show some love on the channel. I see a lot of people live with us. If you want, throw some comments. Let me know what are you trading today. Also, give us some thumbs up on the channel. So I'm uploading a lot of videos on the AZ. I will show you here. On the YouTube channel, you're gonna see here at the top. Yep. You're gonna see here at the top on the playlist section, A to Z Beginners Trading Series. I came up with another great video I uploaded yesterday, and on the thumbnails you will see which episode, which lesson it is. So far I uploaded 4 lessons, 2 introductories and 2 hard lessons. So make the effort, go there, watch them. It's for your own best interest. Okay, so we are here now. Just bear with me. Let's make sure you see all the screen here. Alrighties. So far makes sense. On the gold, what I want to see is a drop. Super useful info. Thanks for sharing. Thanks for the feedback. So on gold, if you want something to do consistently without marking and messing around with your trading, guys, very simple and effective process. As you see strong trends, wait for the bounce, take the next trade with a direction, and that's it. Simple. Okay, so you can even go down to the 5-minute chart and look to trade with the trend. Many times it becomes a bit tempting, like at key levels of support, we can pick up some trades to the upside, and if you want, we can do that today as well. So we have a bearish candle followed by an inside candle, followed by another inside candle, but as you see the moving averages, they are getting very much apart from each other, and that's a strong bearish signal. So what I want to see is the retracement and sell to the continuation. From where I prefer to sell, first I will be monitoring the price action, but I want the price to reach at the level of support, of resistance, a broken support, which is this one here. This is around 78.6 Fibonacci retracement. It will be a good level, but also you want to keep in mind the 61.8 because it's going to reject fast the 20 period moving average. With the black color, look at here at the top, it's the 20 period, and with the red color, it's the 50 period. So just add them on your chart only on the 5 minutes and 15 minutes, and that's all. Next one, let's check the USOIL. You see when I move to time frame above the hourly, the moving averages disappear and we have the clean charts. We want to do market analysis on clean charts, but we need some simple indicators to use to validate the entries. If you are using any other system that you find it to be profitable and you can do it consistently and you can prove 200 trades like with risk management in place and all this stuff, then keep doing that. But if at any point you cannot find consistency and you need something, then I encourage you to start from the moving averages. Simple thing, just for execution purpose. So previous day's low on the USOIL, previous day's high, same on the USOIL or WTI, and it becomes interesting to drop time frame and go to the 4-hour chart. On the 4-hour chart, what I see is that the price remains with this bearish Marabozu candlestick. If you don't know what is a bearish Marabozu candlestick, guys, please make the effort and just watch my videos on YouTube channel. I explain a lot of things here, but also if you really need to trade and master trading, you have to get to the course. Okay, there is a pre-recording course. I upload it on Hoop. You can just directly access it from there. The link is on the description and you can just start, learning on your own pace. I also offer private coaching, one-on-one mentorship. If you're interested, send me a DM and I will walk you through the process there. So inside candlesticks here on the 4-hour chart, on the hourly, nothing, and that's more bearish on this one here. So we keep that in mind. On the hourly time frame, what's the story here on the hourly? The price, of course, will be inside this bearish Marabozu candlestick. That was actually, that marked the high and the low of the today's session. There is room to the upside. If we're gonna close with a bullish engulfing here, we're gonna form actually that sandwich pattern that I talk about all the time, and we can get some good entries on the lower time frame. So what I want to to do now. See how the moving averages will always keep you in the right side of the market. What people, guys, pay attention to me. What people wrongly do, they have moving averages on their charts on all time frames, and they try to explain the market using moving averages. This is a disaster to do. And then they come up with some reels on Instagram and TikTok and say, moving averages, I put them the last in the equation because these guys, they don't understand what they are saying, they don't understand what trading is, and they don't understand how to use the tools. What I'm saying to you right now is that moving averages are only useful to help you stay in the right side of the market with the short-term momentum on the lower time frames. Don't try to use moving averages on the higher time frames and try to pick up the trends and all this stuff. This works very well. This used to work very well in the stock market 50 and 100 years ago. It doesn't work now in the high leverages market. All right, so we use moving averages as filters, not as a trading strategy, but it's a good indication to keep us in the right side of the market, because visually now we can see that, yeah, the price makes a higher highs and higher lows. We see that moving averages, they are falling apart nicely, and based on that we can start looking for long positions if we don't want to take if we believe that the market will continue to the upside to test the 105 level. So on this one here, if we draw Fibonacci from the last swing low to this swing high, we see that the price now is respecting the 50%. I like to trade from 61.8, so I will stick to that one. And the reason I will not pick up a buy order here is because there is no hard support, there is no key level of support. A key level of support found somewhere here. Where are these highs? Here it's like in the middle of nowhere, and I'm not willing to put my hard money there. Hi Theo, could you explain Fibonacci? How does it work? Oh yeah, to explain Fibonacci, one of the videos that I'm uploading on YouTube channel explains Fibonacci. Also in my course I have a section about Fibonacci, and because I want to keep these sessions, live trading sessions, relevant for everyone here without making anybody feeling sad that I don't answer their questions. But it's a bit hard to take, let's say, 1 hour to explain all the aspects of Fibonacci. In a short sentence, I will say that Fibonacci, it's an add-on tool I use in my trading strategy to match key levels of support and resistance with these Fibonacci levels, and the market respected so well. Doesn't matter, short-term, long-term time frames, doesn't really matter, same. The implications are the same. Let's move on. S&P 500. What's the story with S&P 500? Okay, here I will open the ATA software just to check the volume and all these things about the futures. Waiting for response from server. Until that, we keep looking on this one here. Something changed on gold. See on the 5-minute chart, this inside, double inside here. We can see that the price is wants to move a bit higher. For high risk traders, This can also be a buy order, just speculating, let's say 10 pips to target 15 pips. That's 1.5 to 1 reward to risk ratio. Of course, I'm not going to take this kind of trade. I want to see the price rejecting these areas here and then to go long. Sorry, to go short. I said long. Euro US dollar. Wow, what a trend. What a downtrend here. What a downtrend, guys. On the hourly, we rejected this one. Yep. On the 5-minute chart, Euro US dollar is also a good one. Parallel channels. How can we fit a channel here? And it fits enormously well. And this one here with a channel, no, it doesn't go. What about this one here from this swing high to that low? No, it's invalid. So Euro US dollar also can be a good one for me to trade today. Ahmed said, I'm new here. Do you recommend starting with gold for... one second. Do you recommend to start with gold for now, or it's too risky? Look, I recommend to start with anything that makes sense to you. That means either you start from gold or you start with a Euro US dollar. Same thing, no big difference. What will be the important thing for you is to understand risk management. I'm working with a trader now, having private coaching sessions one-on-one, and the risk management, apparently that trader trades a very big account, own funds, and risk management, we figure out that was one of the biggest obstacle to let the person move forward. So the market is not the problem. The volatility is not the problem. If you're going to trade 5-minute time frame, which it's perfectly fine to do that, you need to stick to one market, not two. Don't look at me being able to trade a couple of markets at the same time, but I have also 12 years of experience. I didn't start it yesterday. So, I'm showing you how to explore different market conditions. What you can definitely do is stick to one market. At the beginning, if you want, try a couple, let's say Euro US dollar or gold, see which one fits better to your understanding and just stick to that one. And that will be the best. Guys, make sure you sign up before the end of the month using the link below in the description with YWO Broker, so you can get your discount, your discount in terms of cashbacks on spread. So, and what does it mean for new traders here? A cashback on spread means when you open a trade, from the spread you pay on the trade, you're going to get back 25% after you close the trade. It's a very simple process. I think from our regular viewers, Daniel did that. Yeah. And actually Daniel said that it was a simple process. Yeah. I also have done it myself. And you're going to see at the top of your back office, that label shows that you are eligible now for the 25% promotion, but you can get it only if you use my sign up link to sign up, because that's the attachment to the sign up link. Okay. Alrighty. If the Euro US dollar reject the 20 or 50 period moving average, you know I will be in. I will jump in the trade straight forward. Anyone traded anything today? Who would like to share it with us? Gold, here we come. I will open my platform to, you are on gold, Ahmed. That means you bought gold, right? I had some very good runs last week. So let's see if we're going to continue with this strike this week now. Best offer from YWO is actually a great deal. Great, great, great. Let's keep going. So on the SP 500, the market just opened. We see that the moving averages, they come close to each other. The price now is trying to reject the 50. If we're going to reject the 50, if we're going to reject the 50, yep, if. If we can reject the 50, higher time frame is a bit sideways with bearish implications, but guys, I'm gonna just start building some positions just in case we're gonna drop to test the today's low, because it's still bearish. So for me, I'm gonna just get in here. I'm gonna put my stop loss. I'm gonna put my stop loss above there. I'm going to put my stop loss above there. I can do it here. So stop loss, 1 second. Stop loss has to go, let's say, okay. So this is the trade now. I'm on the S&P 500 short. I sold because the moving averages, they are, the slow 20 is below the fast 50. Rodriguez said, I already made good profit from USOIL today. Amazing, well done. By the way, guys, with YWO, you get, if not the best, one of the lowest spreads on WTI, USOIL, and also on gold. Okay, keep that in mind. So what I will do now, I will lower, I'm risking $552 on this trade. Usually I risk about $500 on every trade. I'm going to lower my stop loss up to $390 now. So I don't like to lose full size when the trade goes against me. I want to be productive. YWO is the best for gold trading, lowest spreads. This trade runs on $440 in profit so far. Let's see if we're gonna get it all the way down to the today's low. 500. Let's check the news as well. By the way, guys, if you haven't subscribed on my YouTube channel, please make the effort to subscribe. Here are the videos. If you are following these videos, the lesson number 1, how to read the chart as a beginner, I'm making it very clear. If you are not a beginner trader or just started, then you need to watch other playlists. But if you are a beginner trader and you're just starting, I explain in a very simple way the charts here. So how to read the charts, what are the charts? Lesson number 2, support and resistance. Lesson number 3, write the trend, exactly what we are doing here live in front of you. Lesson number 4, support and resistance explained. I uploaded less than 24 hours ago. So in a couple of days, I'm going to upload the lesson number 5, which make sure you subscribe, hit the notification button so you get notified when this will be uploaded. Looks like that the price finds it hard to break through this support, and maybe we're going to reverse. So I want to cover a little bit more. So in case this goes against me, I'm going to lose only $200, which I'm fine to do that in this trade. It's okay. It looks like that the buyers try to push the price up. I don't know why my ATAS platform is not responding today, or now maybe it will be respond soon. Gold, bullish engulfing on gold. Oh, bullish engulfing here. Let's see, if we don't get a follow through, I'm gonna sell gold too. I like the moving averages deviation here. I remember when I first started trading, I used to trade on the 4-hour time frame, the bounce of the moving averages with pin bars. That was my best strategy back then. Sellers are pushing aggressively. Right now, I'm going to move my stop loss at break even. So I don't want to lose anything on this trade if the price goes against me. $325, this is the 5-minute chart. I'm gonna close half of the trade now. So to get some profits, I want to pay myself even a couple of hundreds on this trade. Why not? from the last time I took partials. Oh my God, I forget how is. I think you lower the volume here. Close, sell 20. Yep, so that's it. I secure 200. I secure, I think, $200. Where is the history? Yeah, $250. Yep, secured that. Trade is going really well. For those who followed my setup here, price is going down. Let's go sellers. Who is with me on this trade? Gold. I think it's time to look at the gold. I like this bearish engulfing formation. That looks bearish engulfing after a bullish engulfing. That looks nice. So if I sell here with a stop loss of 20 pips, 33 there, you know what I will do? I will place a pending order, sell limit order, and I will go in very carefully on gold. So that's gold on the 5 minute. So if I go in from this point, 20 pips, and I'm gonna trade only a little bit here. I'm gonna just go with one lot, sell, and we're gonna put stop loss on this one. Let's say that's up. Okay, let's do it here. Up. Alrighty. Let's see how our trades will go today. S&P. If we stay anywhere around the middle of this bearish candle, we can drop further down. That will be good. Like now, the price stayed there. We still have 3 minutes until we complete this, this downward move. Gold also drops. It went up to minus 145. Here it comes. We are going for $1,000 in profit now. Let's get there. Let's go. Let's see the drop. What do you think? We will make it or not? Yes, I do trade Echtel. I do trade S&P. Yes. Not, you don't trade S&P, or you don't like to trade S&P? Let's go gold. So basically, if gold breaks below these lows, that's gonna break below the 5-minute very soft support, then we are well to go, at least to touch into the middle of this bearish Marabozu. So let's see. We need to see the break below here. Also, the S&P picked up. Sellers pushed a little bit lower. Okay, we are breaking below. If we're gonna move a little bit lower, when we're gonna go to 1,500, I'm gonna close my trades. I just want a little bit more. 1,500 total profit. The trades, both trades will be closed. Actually, I made 280 something so far, so I think I can close them for now. 251, yeah, 1.5. Happy with the overall. So it's like risking 500 on each trade, as that's my average risk. I risk a little bit more on gold today because I put one lot. So that made it like a 3-to-1 total for the session. So I'm happy with that. If you don't understand risk management, guys, I cannot address how important is risk management. Risk management is everything in trading. So what did we traded here? Both of them was trend trades, following the trend. I said that on the higher time frames like hourly, daily, 4 hours and so on, we don't use moving averages. We only do analysis based on market structure. But when it comes down to execution, especially if you are a beginner trader, the lower time frames can trigger you and get you in too many losing trades just because you acted emotionally. So by using the moving averages, you keep yourself accountable while trading. Like on the gold, see bearish engulfing, and it's exactly how I teach it inside my course guide. Downtrend, lower lows and lower highs, moving averages, they confirm. Rejection from a resistance, Fibonacci as well. And price action, bearish engulfing here, it took out the previous bullish engulfing, bam. We had a nice trade. S&P even better. Lower lows, lower highs of the moving averages again. And yeah, that was it. I showed you step by step the risk management process live. And yeah, we had a good session. So I think I will end the live for now, guys. Who followed my trades today? Anyone here? Again, if you are new to the channel, please subscribe here. If you are lost in your trading, or if you need somewhere to start with and really learn proper trading, I have here my trading course, fully engaging. Okay, it's on-off payment. You don't pay every month or every year. You have a lifetime access, and you're gonna learn everything. There is everything here, everything. If you take this course, you don't need to look elsewhere for trading. S&P keeps going down, gold struggles a little bit. And this is why I like trading the indices, because when they give the trend, they just go for a while, which is perfect. Okay, guys, thank you so much for being here. I hope you find it valuable. Please make sure you subscribe on the YouTube channel, like the video, watch all the videos I have here, and I will see you on Thursday, exactly the same time. So take care and happy trading until then.